Well, okay, so before we talk about specific stock futures, let's address earnings and let's pull up Thermax as well. Now, it's been a weak show for Thermax with regards to its June quarter results, with the margins shrinking to 7%. What were the key factors and what weighed on the company's financials? Let's ask the management. Joining us on the show at this point in time, we have Managing Director and Chief Executive Officer Mr. M.S. Unnikrishnan. Mr. Unnikrishnan, good morning and thank you so much for joining us. Sir, I'm looking at growth in your revenues, and they have certainly gained on a year-on-year basis, but operationally numbers have been lackluster. Can you take us through the key highlights and what has led to these earnings this time?
Agam, it's not a disappointing number overall, barring the specific number which you picked on in terms of the profits and profitability for the group. I would go starting with the order intake for the quarter, which is more important for a capital goods company. Despite not having a very large order like the 1,000 crore order that we had in the last year first quarter, we've been able to clock a number in excess of 1,600 crore in order intake, which is way ahead of our normal averages. So it had been a very good quarter as far as order intake is concerned. And second is in the revenue side. At the group level also, our revenues have gone up by almost 17%. And now coming to the EBITDA, yes, I agree that it is at the net level, it is only a 4.3% more. But if I go to divide the Thermax standalone, Thermax Limited, and the group level, Thermax Limited has improved its profitability and it has gone up by 36% between the last year quarter one and current year quarter one. So the main operations of the company, which is related to the boilers, the heaters, the cooling, the water treatment, the air pollution control, has raked in a 36% improvement in the profitability. However, we had a weak quarter coming from our European subsidiary, both Danstoker Group as well as Thermax Europe Limited, of which Danstoker is an operational loss, whereas Thermax Europe is more of a provisioning done in anticipation of an expected requirement of money to be provided for making good if there is anything wrong with a project. So that's about it. And last year in the first quarter, one of our construction subsidiaries in India had a one-time income which is fairly substantial that is not present in the current year. So if I go to normalize for this, certainly it is a fairly decent performance, and pulling back from the lower profitability level, I think we are headed for a better year in the current year. So that's the overall performance that I'm looking forward to.
All right, Mr. Unnikrishnan, just a few clarifications. I was just looking at your numbers closely. The tax rate for this quarter has gone up to nearly 36%. Any reason for the same? And is this the normalized rate that one can expect even in the coming quarters?
It is a deferred tax which could be converted. So normally we are not a company which looks at tax efficiency very specifically for avoidance of tax. So whatever is the incidence happening is booked in the respective quarter. So you will certainly see us improving on that. However, I have to be honest with you, we are a company which is closer to MAT. We are not doing anything to ensure that we can save from tax and invest accordingly. Where there's a need for investment, we will do that. Otherwise, we pay normal tax if you look at the history of the company also.
Sure. I just wanted to know, is this the tax rate that we can expect even in the coming quarters then, 35, 36%?
That you should be looking forward to for the company.
All right. You also spoke about your order book. In fact, the order bookings you said were higher than the average that one has seen in the past of 1652. Your total order balance went up by nearly 30%, which is currently at 6,420. What's the guidance that you can give us for FY'19 in terms of order book from the current levels now?
But though we may be trying to improve it, I'm not seeing very large inquiries under conclusion going forward in the immediate future.
So can you give us an idea about how the capital expenditure cycle is panning out at this point in time from your clients? How much are they willing to spend? What levels are they willing to spend at this point in time? Are we starting to see a pickup?
Agam, I had indicated last quarter itself that the inquiry pipeline is improving and isolated projects are also started getting fructified. However, it is not visible that across the board there is an investment cycle recapturing is invisible at this point of time. Then I have to go sector wise, because I could have talked this in between 2005 to 2010 that virtually all the core sectors are investing. No, they aren't doing that. In the core sector, there are some companies investing, some of them not investing. For example, both JSW as well as Tata Steel has gone ahead with their expansion program. I haven't heard the same thing from either SAIL or the rest of the steel makers. Power industry per se, I'm not expecting in the thermal area any further investment to happen in the near future. However, the ones which I'm expecting the ordering to start is cement industry, where their capacity utilization has improved in comparison to 1 year back. They are all closer to 80%, and none of the balance sheets of cement companies are leveraged sufficiently in the country. And there is going to be an improvement in the construction sector, road construction and infra construction going to happen. So I would expect when they reach an 85% capacity utilization, which is anticipated in the next maybe 2 to 3 quarters, you will see good quantum of ordering going to happen from the cement industry. Oil and gas, no new refineries started ordering, though they have got inquiries ready. So I'm expecting at least 2 of the refineries to start also ordering. When is the question? Will it happen? If it doesn't happen in the next 1 or 2 quarters, then elections will kick in, and I don't think it is going to happen for at least a period of maybe 1 year thereafter. Fertilizer, all the expansion programs are going through, no further expansion is expected. So these are the main large sectors. Then comes food, and food processing has turned out to be a major investor in the country, and subsectors of food like dairy is literally going up. So there, the ticket sizes of projects which were 100 crores in the earlier past is now moving upwards. There are larger projects even going all the way up to 500 to 1,000 crore single projects happening. So that sector, in my understanding, is going to be leading as an investment sector in the country in the next 2 to 3 year period of time, and that will continue unabated on account of the affluence catching up, income going up in the rural area where the eating habits are changing. So food and food processing is an industry where I'm looking forward to, because they are not worried about the governmental regulations, policy support. Similarly, the engineering sector, auto ancillaries, alcohol, beverages, textiles, these sectors will continue to be investing. But they cannot, that you can compare with maybe a steel plant coming where the single plant can be a 10,000 crore investment, or a power plant of 5,000 or 10,000 crore, or a refinery of 30, 40,000 crore. Well, we can't compare with that. So the larger size of ticket size are going to be missed by India, at least for the next few more quarters, and the other sectors will continue to be investing. So that's my overall surmise on the investment side.
Okay, Mr. Unnikrishnan, appreciate you joining us today and taking us to the highlights of the quarter gone by, and wishing you all the best for the remaining quarters of FY'19.
Thank you.
Okay, that's the management of Thermax. But continuing with the earnings theme, Lupin 2 reported weak set of numbers for the June quarter. Let's head across to